Good morning, welcome to this weekly market update from AGM Markets. Today is the 3rd of August 2012. Today what we'll do is have a look at some technical analysis on Euro dollar, cable, dollar Swiss, dollar CAD and gold. Shooting this video on a Friday, so we'll give a nice sort of review of what's already happened this week, and we can have a look at what we expect to see next week and what's going to come out for the rest of the day, because it's quite an important day in the markets. Won't be making any trade calls recommendations. You trade at your own risk. If you could please read our full disclaimer on our website www.agmmarkets.com. On each of these charts there's 3 moving averages. The red one is 55 simple, purple is a 100 simple, and the gold is a 200 simple moving average. Okay, let's have a look at Euro dollar chart. As last week's weekly candle was a bullish engulfing candle, quite a nice bullish candle. We did still have some upper wick on that candle, but still it wasn't engulfing. So you'd expect this week to be a bullish week on Euro, but obviously we've had, on the chart is not a hugely bullish chart. It has been, especially if you look at the daily, we are in a significant downtrend. But it does look like it wants to have some sort of retracement. But if you look at the previous green candle, that one there, that was a hammer, and we bearish engulfed the week after. So Euro does have a pattern of trying to have some sort of retrace, and then it just tanks the next week. So do be cautious, and this is kind of proven this week. It's not having that big upside that people are looking for. This is mainly due to yesterday. If you look at yesterday's candle, we did have a big pop up before ECB President Draghi was speaking. Everyone was hoping for the big bazooka to be announced, but we didn't get that. And also the FOMC as well this week disappointed many investors and traders across the board. And this is shown in yesterday's candle. We had a big pre-Draghi. Everyone was getting very, very bullish, and then he disappointed, and we sold off, and that's why we have that big upper wick in yesterday's candle. So some would say that we should sell off today, maybe. But there's still some decent wick on the bottom of the candle. So some people just say it's a retracement on the charts. It can do anything today, and especially today because it is non-farm payroll. So some people tend to ignore the technicals on non-farm payroll day, but keep them in mind anyway. You can also see though that we had this lovely bounce of this 55-day moving average yesterday. We've been speaking about it for the last sort of few weeks. If any retracement, if we get any sort of retracement, then watch the 55-day moving average. What will happen at that key indicator? And you can see that we've bounced off of that. So the bias, you'd have to say, would have to be bearish now, unless we get any sort of key daily candlestick close above that 55-day moving average. If we flick it to the shorter term time frames, and let's say this is the 4-hour chart here, sort of fibs that I think is already in play. Let's add a 78.6 in there. No, it's not actually a fib set. I thought that was a fib setup there from the lows to the highs. So ignore that. This is the thing. A lot of for selling opportunities now. A lot of people are going to be, especially if you flip to this 1-hour chart. So we have the high from yesterday when Draghi spoke and pushed it down 250 pips. So people looking for further selling opportunities are going to be looking at the fib on this 1 hour from the lows to the highs. You can see we have this cluster of moving averages around here. Currently we're stalling at the 55 bar moving average, and we also have the 100 bar moving average just above. And also we have the 50% Fibonacci retracement. So that's one sort of level you can look at for selling sort of opportunities. But yeah, you can currently see, for a shorter term play, what is in play for the rest of the day would be this fib, most definitely. People will be looking at this fib for sure. But you have to remember it is non-farm payrolls at 1:30, so the market does get very, very volatile. Let's have a look at cable. Daily chart on cable, what we've been speaking about was that 200-day moving average. We saw it got held there, and we also started to we actually had a daily candlestick close above it, but then we've come back down, so it's held once again. So key level. I mean, instead of looking at the moving average, you could look at the level and say 157.50 was the level to look out for this week. We did speak about it in last week's video, I think, about this 157.50, and you can see that is the key level to put on your cable chart. In terms of, I mean, we are making higher lows here on cable, so keep in mind on that. That trend line is still in play, so keep an eye out on that for next week. I'm not sure when we'll do the video next week. We could do it on Friday again because it's good to do a review, I think, but could also do one on earlier in the week. But yeah, I mean, you can see that upline trend line is still in play, so until that gets broken, people will still be buying the dips off that trend line. You can already see yesterday we had a nice bounce off this trend line after Draghi spoke. I mean, it brought everything down. This is obviously cable, and maybe it shouldn't affect the pounds, it should just euro, but it still did affect it. But we got a nice bounce off that trend line support. So I mean, in terms of cable, the chart, especially this 4-hour chart, is nice and technical. You have that big resistance at 157.50s, and then you have the trend line support here, which is still in play. Let's have a look at the dollar Swiss chart. As I say, I've been speaking about recently how it's been correlating very well with the euro dollar. It's basically just been doing the complete opposite. The fib that I've been that a lot of people have been talking about, and it's been in focus I've been looking at this week, is the fib from the lows to the highs. And you can see it coincided very well with Draghi. As soon as before Draghi was speaking, dollar fell all the way down to his 50% Fibonacci retracement level, which is also previous support, and it also has his 200 bar moving average on the 4-hour. And this comes in at 0.9697. And you can see we got a big bounce off that. It's amazing how fundamentals can coincide with technicals at times. This was a prime example. And we got that 4-hour candle was just an absolute beast there. So I mean, until people will be looking out for the break of the highs here at 0.9971, but it's all about this fib, I think, in terms of this 4-hour chart on dollar Swiss. What happens if we get any further sell-off? Then look for any bounce of the 50%, and if we get any more momentum to the upside, then we need to see a break of these highs at the 99.71 level. And dollar CAD chart, in terms of the daily, nothing too exciting this week, in my opinion. The fib, I think we spoke about last week. I mean, just the first thing that pops into my mind would be what's going on there? The fib from lows to highs. And you can see we had here an initial reaction off the 50%, and now we've got broken, so we're now below the 61.8, but it's not acting too technical, so I wouldn't actually keep that on my charts. You see we're below all the moving averages now, so if we get any bounce up, then you need to see a clear close above this sort of confluence zone with a 100 day moving average and the 200 day moving average. But another thing that pops into my eyes straight away is we have a nice downward channel here, playing out very technical. You can see that the price is just going in between this channel. So for any daily chart players, it's one thing that I'd definitely be looking at. As you can see, it's been reacting very technical. You can see at the top of this channel here, this is another example of how people trade. A nice confluence area. Confluence area is where two or more things come in at a similar price. So we had this channel resistance here, and also coincided with the 55-day moving average, and we had a nice bearish engulfing there. So a prime selling opportunity would have been to sell after that bearish engulfing, and you can see we had 2 consecutive days where you could have made many pips off of that downtrend channel. But yeah, in terms of dollar CAD, I literally keep it on the daily chart and just play the channel really, because you can see it's been playing very technically. Okay, let's have a look at gold now. What we've been speaking about for the last few weeks, well, we've been speaking for a long time now. First of all, we have the trend line support, but what is key was this is the weekly chart. We've been speaking about it many times. The 1560s level still failed to have a weekly candlestick close below that level, and you can see how we just until we get a weekly candlestick close, you have to be bullish, in my opinion, because see the multiple candlesticks here, 1 2 3 4 5 6 7 8 9 candlesticks. They're weekly candlesticks where we pierced below this 1560s level and we closed above it. So the buyers just keep on pushing the price up in the minute, and especially with all the Eurozone stuff going on at the minute, it's still regarded as a safe haven, in my opinion. So yeah, last week's candle was a bullish engulfing, a nice reversal candle, and it is looking for it is struggling to get momentum to the upside. And we've spoken about this. If you flip it to the daily chart, key resistance on the daily chart is the 1630s. We've spoken. You can see it's just been playing in between this range here. On the daily, I suppose you could move the support down a bit. Or in fact, what I'd probably do is similar to cable, making higher highs here. So in this sort of triangular formation on this daily chart, we have the resistance at 1630s and a nice trendline support here. It's literally just playing in between this range. So that's the way to trade. If it's in the sideways action, a lot of people don't like sideways action, but I think it can be very it can be quite simple to trade if you literally just play it off the bounce. Look for the reversal candles, for example. There had a nice hammer, could have bought straight after that, and you can see 4 consecutive green candles straight after. We could have made plenty of pips there, and also we had a sort of reversal candle there, could have sold straight off there. These are sort of ways to trade the charts. But you can also see we have the 55-day moving average and the 100-day cutting in between this triangular formation, so keep that in mind. That is making it quite choppy. So in terms of solid momentum to the upside, you can see we need to get a solid break above the 1630s, where we'll be looking for a daily candlestick close to get above that, and then the 200-day moving average. That's what it's looking like it wants to do, and it needs to do if we get any more significant momentum towards the upside. And to the downside, we need to break this trendline support, and then a weekly candlestick close below those 1630s, in my opinion. Okay, that's done for the charts. Let's have a look at the calendar. A brief look at the calendar, because obviously we're doing more of a review today. The main news really out on Wednesday, we had UK manufacturing PMI came in worse. ADP non-farm employment change came in much better, so keep an eye on that. Today, so we have the non-farm numbers. US ISM manufacturing PMI came in worse, 49.8. That's a big number, that, especially for the more fundamental players. The 50, if it's below 50, that is not a good sign for ISM. On Thursday, what did we have? We had UK construction PMI, it came in much better. We had UK asset purchase facilities stay the same, and the official bank rate. That was yesterday, as much expected, but it was all down to the ECB. Remember, we cut rates last month, and a lot of people were hoping, well, not maybe hoping, but that would have been the surprise factor if that came out, if we had a bigger rate cut. And then we had the ECB press conference at 1:30, and Draghi disappointed again. So that's why we had such a volatile day yesterday. But in terms of today, we've already had UK services PMI out, and that came in worse than expected from the UK. So some terrible numbers coming out of the UK, especially for manufacturing and services. In terms of today, though, it's all about non-farm payrolls. 1:30 p.m. UK time is expected to be a better number from last month's 80,000. This month we expect to be 101,000. So that's the key data you want to look out for this week, and be careful, because it does make the market very, very volatile. Of course, you can make many pips trading it, but you can also lose them as well. At the same time, we have the US unemployment rate coming out. That's 8.2% forecast. And to finish off the week, we have US ISM non-manufacturing PMI. That's forecasted at 52.1. Previously it was 52.1. Okay, I hope you enjoyed today's video. More of a sort of review session. I think we'll go back to doing the Monday next week, so we can do a bit more of an outlook But I think it is good to review the market so you can see what has happened, especially talk a bit more about fundamentals as well. So yeah, I hope you enjoyed this video. Have a great rest of the day trading. Do have to be careful on non-farms. And yeah, I'll catch you next week. Thank you for listening.